Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this is for Tuesday, the 26th of May, 2020, 6:15 p.m. Central Time. So what an interesting day. XLK and QQQ, as I step over here for you, were weak while the other stock indices up. Let's call this a rotation day. The market started rotating to travel, leisure, some of the beaten up areas, and started to dump back on the Netflixes, the other FANG stocks, as people start going back to work. And what did I tell you the other week? I said, at some point we're going to reach that where all these subscriptions that are coming out, you got to question how many people are going to be able to keep them as they return gradually back to the workforce. Tomorrow HBO Max comes out. I would say that they're behind the 8 ball. I would say their timing couldn't be worse. Had they come out 2 months ago, well, they catch a whole new audience. Now these people are going to disperse on them. Not saying it can't succeed. I'm talking about terrible timing. And they've got it. They have terrible timing on it. On the energies and other markets, you'll see that they started climbing on you. Metals gave up ground today as the stock market up 600 and some odd points in the Dow, and the other indices strongly higher with the exception of the NASDAQ, where you saw selling coming into the metal markets, specifically the gold market, gold miners, as they backed off. But let's get to some of the charts and take a look. On XLK, there's still a gap left in this chart right here. I'm still looking for that to be filled. When it was there, showed it to you the other day last week, I still think that that can happen. And that means a drop, in my opinion, to 93.49 at any point could be in the cards here. Charts like to fill gaps. Do they always? No. There's one left there, there's one here. So don't get me wrong. It's not magic. You have to fill a gap. But they like to get filled if they're close by. It's called a trader's target. When we look at the trend, it is certainly still to the upside. You have higher lows. You certainly have the higher highs. What would break the pattern is taking out 95.61, but it would not set up a bear pattern because the best you could have is a higher high and lower low if you took out that number. To get and take that out, where might the support come in? Why not the 18-day average of closes in red? We've seen how it's been acting. That's been your main support line. It's not the 100. When they came together, it was nice, but it was really the 18, the closest of. What about resistance? Right here, right now in the Bollinger Band. The black dashed lines are called Bollinger Bands. This is the 200-day moving average of closes. Markets on this algorithm will trade within the algo 95% of the time. That's what it's designed to do, to keep the market trading within it. I believe, I can't prove it, but I believe that formula is built in to artificial intelligence and some of these systems that trade, and they look at it and they go, hey, the probability is we're only going to stay over that number 95% of the time. Why are we buying up there? Why aren't we getting out of the market? Or why are we not, if we got other sell signals, hitting the market at that? I don't know all the techniques that they do. I don't have to. I know how the Bollinger Bands work, or ideally work, and I realize they can stay over at times a band or under them when a new trend starts in, and that can happen, but you learn where are you in the trend. Right now, that's a pretty big resistance area, that upper Bollinger Band. What about momentum? I want you to look. The slow stochastic reading, what I like about it more than most of the other oscillators of momentum is its personality. It can get overbought, oversold, neutral. It can also convert overbought to locked in. I call it embedded. You can call it locked in, whatever you want to call it, to the upside or the downside. To do it on the upside, you have to have both numbers that make it up. They're called a K and a D line, and the whole difference in the formula is one uses 3 days worth of data on a daily chart and 5 days on the other one. So the blue is 5 days. The red is 3, and the red will whip around the blue, like moving averages. Now, one of the things I've noticed in my pursuits of trading is in looking at them, when they're going sideways over 80 for several days or more, which we certainly have here, that's called embedded. When you lose that, it's often, not the word always, often, a sign the market's going to make a retreat to the closest main moving average. Retreat because you've got the bullish embedded reading. That would be the 18-day average of closes. When you reopen in the morning, unless you are sharply higher, the odds are very high you're going to lose that embedded reading, just the way that the math works on it. On SMH, where do you see the resistance? I know where I see it. You're not embedded. You hit the upper Bollinger Band, and I think the pros are taking money off the table. This is called a pipe. And it's basically that you're going sideways in that, and you keep pulling back to this 18-day average, spinning back to the high and then coming back down to it, not getting a lot of follow-through outside of that. You see it even better in the XLI. Look at this. So yes, you're over it today. The odds favor it's not going to be over it tomorrow. Now, if it is, and if the market closes again higher, I'll call that a breakout to the upside. And possibly that's where the industrial sector is going to finally move up and say, it's my turn. There are things other than tech stocks out there. This could be it. We wait and we see. It's overbought. Energy sector, you're right at the top resistance. I think the pros were using today to come out of a lot of markets. Now, if they break out, I'll be right there, and I'll try to jump in and for my traders and my subscribers, telling them what I see and where. I won't do it here, but I certainly will do it in my subscriber videos. But I don't see it just yet. I see the resistance right here at that upper Bollinger Band up to the 100-day average and support at the 18 and an overbought market. In QQQ, I've said it each time you've hit this upper band, I don't think you're going to be able to pop and stay over it for any length of time. And you haven't. That does not mean you haven't climbed. You have. And I'm not blind, nor are you. You've been over the 18-day average. You've had upside bias literally this whole time since in March. And each of the buy signals have carried you back to the Bollinger Band. But it's also been the area the market has stopped. EFA, is this a breakout in the emerging markets? Well, I, for one, am looking at it hard. If you get another upward close, then I've got to think, yeah, you finally put a base in, and maybe this is where this market comes alive and says, we can deal with COVID-19. It's our turn to catch up. You haven't participated here in any of the real rallies that have gone on. You broke a little in March, and you just went sideways. I think you'd agree with that in looking at the chart. When I look at GLD, well, a big rally in stocks today said dump some of the assets that what? Aren't paying you any dividends or anything else. So gold's been getting dumped. Okay, you're in a minor downtrend. You're still caught in these bigger bands. I see that. And you're going to whip, in my opinion, around that 18-day average for a bit. But the bulls lost control today. The bears go home in command of the market until 163.47 is taken out. They can sell if they want. I would imagine they're going to at that 18-day average with tight stops over that number, since they have the bias down and momentum down. Doesn't mean they have to do that, but you have to guess what people you think they're going to do. I think the same thing in the miners. I see the resistance, the 18-day average. It was support. Now, because you've got the pattern of lower highs, lower lows, well, you don't want to get back over 36.44. You have to decide, do you want to risk that $1.50? If the market gets hit hard, the lower Bollinger Band is a likely target. If the market stalls and goes nowhere, it's going to probably spin around that 18-day average for a bit. Just guesses, but that's what I'm seeing. TLT, it's paying pretty good attention to this 18-day average of closes, along with the fact that you have higher lows and lower highs. So the market seems to be stuck in here. I'm watching the slope of this line drop, so I think it's going to do one of these and then slide out just like that, because if you watch the bonds and the notes, you get a pretty good feel they're just going totally sideways. Last, our FXE went right up to the key resistance of the 100-day average. Now, in the past here, it's been able to get to the upper band and that 100, fell back. The trend is up because you got higher lows, higher highs. You're in an important resistance area, overbought at the same time. I put out at the end of the day, as you know, this Spider ETF video. You might want to tell your friends about it. I think that you'll find that what they get if they go into the one that's got the trade recommendations is a whole array of information. I'm covering now about 32 charts there. I put it out in the neighborhood of 4 in the afternoon, that's Central Time. And the idea is to give you, at any time that you come home from work and so on, an idea of what I'm seeing. Ideally, before you leave the house, you take a look at the morning futures video. And I'm talking my early morning one. The reason is we know that a lot of these ETFs are based on what the futures are doing. And then I'm bringing you up to date, one at the end of the day, one first in the morning, and you can see how they're going to play on each other because you don't open those ETFs typically until about 8:30 a.m. Central Time. Just go to our website, www.iraepstein.com. Under the word research, everything's explained. I'm Ira. Have a good day. I'll see you tomorrow.